Okay, hey guys, Sensei here again. So today we're going to talk about a very important topic, which is STOs, security token offerings. So, cryptos have been wrecked, but now this is like early May 2019, and it looks like Bitcoin is now recovering. It's now like $5,800 after falling to a low of 3,000. From 20,000 to 3,000. I'm sure that scared the hell out of everyone, okay, as Bitcoin fell and fell and fell and fell, but now it looks like it's going up again. So everyone's asking, what's the next big thing? Is it STOs, security token offerings? So let's get into that so you understand what you are getting into. But before that, STOs are actually part of a fundraising exercise, and it was caused as a response to the ICO, initial coin offerings. In fact, there are 4 ways where you can quote-unquote raise capital or produce new capital. One is the STO, security token offering. The next is the ICO, initial coin offering, followed by IFO, or there's more something, initial fork offering, like Bitcoin forking to another version of Bitcoin called Bitcoin Cash, Bitcoin Gold, Bitcoin Diamond, and all that. And finally, initial airdrop offering, which I love. I love free tokens. Okay, airdrops are like great ways to introduce you to get free tokens. But today we're going to talk and focus about STOs. But we really need to understand what happened during the ICO process. So during 2016, 2017, and 2018, thanks to Ethereum and the smart contract, many companies were issuing initial coin offerings where they sold you tokens and you gave them money, and then they listed that token on an exchange without them having to give you equity. So it was just a way like crowdfunding to fund a lot of projects, And in 2017, the wave just went up. ICOs raised like 5.6 billion in 2017. In the first 4 months of 2018, they raised like 6.5 billion. Overall, they raised about 24 billion in 2018. Crazy phase, This is when the phase Moon, Lambo, and all that became popular, whales and all of this. And it all came down crashing. Now, one of the reasons why it came down crashing is that ICOs, there was a lot of scams. It was not regulated. And when you bought a coin for an ICO, you were essentially buying a token that would allow you to use the coin in that system. That's a utility token, And when you did that, obviously, there had to be a use for the coin, right? If there's no use for the coin would be worthless. Just think of this like Forex, So a small country somewhere, I don't know, maybe Timbuktu, issues a coin. Now, if there's no use for the coin, obviously the coin is not going to be very valuable vis-a-vis the US dollar. It's like this foreign exchange. However, if Timbuktu suddenly found a lot of oil and gas, then the value of that Timbuktu coin will go up because, there's a lot of use for it. And similarly here, if you have a utility token, if you don't have enough users to use it, why would I want to buy it? And that was the other thing that contributed to this entire wrecked process. Another example is the US dollar. Fine, the US dollar has a lot of debt, probably can't pay the debt ever in its lifetime, but the US dollar is the most, it's the world reserve currency because it's used as an oil currency, right? Oil is always traded in US dollars. And so do a lot of commodities. All the countries like Malaysia are trying to move away from the US dollars to other dollars. So this is the problem with the ICO in the sense that first there was a lot of scammers. They were trying to scam you anyway, so they came up with all these funny schemes. They just went out and met all these crypto influencers, and we all got hooked in. Some of those were outright scams. Next thing was, even if they were not scams, there was really not much use of it outside of the ecosystem. So this explained the wreck, and this is where the SEC, Securities and Exchange Commission, came into. Because the investment in ICOs was not really regulated, investors didn't have discourse when they got scammed. So the SEC moved in to determine if all these ICOs were doing legal thing, and they applied something called the Howey test. What's the Howey test? Well, the Howey test is a test where you determine whether what you're offering is a security, and there are 4 criteria here. The first one must involve an investment of money, common enterprise, you do it for profit, and fourth and most important thing, the profit comes through the effort of the promoters. So imagine you buy a token. If you buy a token just to use something in the ecosystem, maybe you like it, it's an application for banking and use the tokens to do your e-banking, whatever, that's okay. But hey, when you buy tokens, we expect a profit, and that breaks the law. Now, essentially, what you're selling is not an ICO or tokens, utility token, it is a security token. So there was a landmark ruling by the SEC on Airfox and Paragon, and these two who issued ICOs were then forced to pay back the investors. I'm one of them, I admit it, okay? So this is a very good case. Here you see an example of the claim form that I have to submit to Airfox to get my 20 grand back. In fact, these companies were being asked to pay like 12 million US dollars by the SEC in a bear market to investors, showing that they have to protect investors. And the SEC was getting really upset, you know, because at that time Airfox and Paragon were selling these ICOs to US investors. Of course, after that we saw a lot of cases where US investors were not allowed to participate in ICOs, although for STOs that's a different thing. So once again, thanks to the SEC, a lot of investors may have been saved. So a security token now is different from an ICO because it is an investment contract between you and the company, and it gives you certain rights, right? Because if I am an investor in the company and the company issues a dividend, I have a right to the dividend. I might have a right to the debt, right? You know, can be issued a dividend. They can issue me I can buy a loan stock, which I give a borrowing to them, and then I get a debt. So these are rights that are not covered in an ICO, but are covered in an STO. Okay, so essentially an STO is an investment contract, okay? So being an investment contract, it gives us investors a lot of rights, like control rights, investment rights, physical delivery rights, litigation rights, and all that. Also information rights, because we need the information in order to make timely decisions as far as our investments is concerned. So being a very legal instrument, there are three things that can happen now. It really changes this ownership right thing from what was a token in the ICO to an STO, because with an STO, suddenly it's like money, right? You can trade the securities for other securities. You can use it as collateral because it is something that is legal and it's something that is valuable. You can also store it in many different wallets, and most importantly, this gives us the chance to tokenize a lot of assets using security tokens. Now, let's say an example, gold, because gold now it's like almost 1,295 per ounce. You don't want to buy an ounce of gold. You can tokenize the gold maybe into 1,000 parts, and you can buy one single part on the blockchain for like $129, right? $1.295. So these are very exciting times. So if you can tokenize all this, it should, and many people are saying it will, lead to another boom in cryptocurrencies led by the security tokens. So we can and we will. Are we ready to moon again? Are you sure? Whoa, wait. Time out. Hold on to your horses, okay? Because it's not easy to get in security tokens. There are three regulations that cover security token. The first is Regulation D. So this is only for security tokens that are offered for high net worth accredited investors. So you have to have, and this is for the USA obviously, you have to have a net worth of US 1 million, or you have to have an income of US 200,000 or combined income of US 300,000 per annum. Because they don't want the poor people or the normal people to get involved, because all you guys want to do is moon, right? So accredited investors are more knowledgeable. Now, there's also another regulation called Regulation A+. This is for an offering that's limited to only US 50 million. This is for non-accredited investors. Now, it's going to be more expensive to launch STO based on Regulation A+. Again, it takes a longer time. So companies will have to consider this. And next is Regulation S, which is an offering of security tokens outside of the USA. And there, it's very important for the promoter to actually comply with rules and regulations outside the country. And that's where the tricky part is. Because if you're offering an offering outside of your country, if you're offering in 10 countries, you got to follow 10 different regulations. So I think that security tokens will be a wave of the future, but it's going to take time to develop and mature, okay? In the meantime, what we can do as investors is really gain more knowledge, study more, especially on companies, because the crash has happened. And just like the NASDAQ crash in 1999, After that, 1999, 2000, after that, the dot-com boom and the dot-com bust, you need to go into real companies and study, and I'm sure there'll be good ones, and they'll be offered under the security token offering, which will be all the more better for us investors in the future. That's it for now. Sensei, this is about security tokens. See you next.